All right, welcome everybody to this week's client support webinar. My name is Bennett McDowell with TradersCoach.com. I've got Jean McDowell here as well, my better half, and also she runs all the marketing and email and all that kind of good stuff, behind the scenes stuff. So today is December 28th, getting ready for the new year. So our next get together will be next Wednesday, next year. All right, so there you have it. Hope everybody's had a good holiday so far, and of course, a safe one as well. All right, so before I get going, Jean, why don't you come on? I know we got Wednesday Night Live. Tell them a little bit about that and put a link up there for them so they can register if they haven't already.
Well, that's super. All right. Well, welcome everyone. And just to let me know that you can hear the audio and see the webinar screen, if you could give me a hello in the questions area, that'd be great. And maybe even tell me where you're watching from. I know some folks like Jerry, I see you're in the house. Jerry Bongard's in the house. And Jerry's been traveling all over because he's normally in Australia, then he was in South Dakota. Oh, looks like he's in the United Kingdom now today. Very good, Jerry. And JP, good to see you in Michigan, and got a great group here. So one thing I did want to mention is tonight we have a terrific Wednesday Night Live event. I just posted the link in our chat area. Let me know if you can see that link by giving me a yes in the questions. That'd be great. So tonight's event is going to be about multiple time frame analysis. Bennett is the expert on that, and he will show you exactly how to set up your charts and how to use it and how to read those charts to get a better result. All right, well, Bennett, back to you.
All right, thanks, Jean. So she put the link up there to register for this afternoon's webinar. Also, Jean, before the end of the webinar today, because we're going to be together for about half an hour, can you put the link up for the books too? Okay, because some people have been asking me for that as well.
Absolutely.
Right? So to the Amazon page where we have our own Amazon page, I guess is the best place. All right, cool. All right, well, what a great turnout today. My gosh, we've got people from all over. A lot better turnout than I expected for the holidays, because during the holidays everybody's pretty much out of commission, so to speak, because they're vacationing. So this is a really great turnout. Great to have people here. JP, I will also see you in coaching next year, right? Next week. So that's fine. Good to see you. I will looking forward to seeing you then. And you are in Michigan, so you are extremely cold, I think, up there, right? Did you get dumped on with all that snow? Oh my goodness. All right, you got yeah, okay. How many feet did you get? Just out of curiosity. I know I have people I know in Buffalo, they got 4 to 6 feet depending on where you live. Unbelievable. And then of course, I went to school in Syracuse University up in Syracuse, so they got a ton, but they didn't get as much as Buffalo. So you got 36 inches, right? Or is that degrees? So it looks like that's the temperature there. So it's warming up a little bit. All right, good. And Jerry, welcome from the UK, like Jean said, and also to everybody else all around. All right, let me dig in. I got some administrational items I do want to go through, and then I got some things to cover as well. So first thing I got to talk about are the risks involved in trading. I think we all know there's risk now in the markets, especially if you've been coming to these events. We talk about it every week, but we have to because the recordings are out there. So you have to have a disclaimer on each recording technically. So that's why we do it. But there is risk. It's possible to lose some or all your money trading the financial markets, and basically always trade with risk capital. And check with your financial advisor before taking any stock trades we may recommend, or talk about opportunities or forecasts in the markets, because we don't know your personal situation and what's suitable for you and what's not. They do, and a lot of factors come into play on that. Things like your age, all right, your net worth, what your financial expenses are or obligations. So there's a lot of little things that can impact decisions in seeing if short-term trading is appropriate for you. So definitely check with them. And of course, you need to know how to do risk control, and I have a whole host of books sitting there right ready for you. And Gene just put the link up for the our Amazon page where you can get these. And what I would like you to do is pre-order the Art of Trading second edition. That's going to come out next year. And that's going to be a really good book. We've updated that with the latest techniques and the latest software. So you definitely want to jump on board and grab that. I think the pre-release price, the reason why I'm bringing it up, is the cheapest that it will be at. So grab it now at the pre-release price. Now, the last time we released the book on the Art of Trading was back in 2008. And that's this book, second in from the right. So, you know, our publisher, Wiley Trading, asked us to produce a second edition, and we're excited about that. I think it was a great idea because it's been a while. All right, 2 books on money management, Trader's Money Management System on here on the far left. That's a deep dive. That's a comprehensive book, great book on money management. But I also came out with one in 2022, brand new one this year, on money management for traders. I think almost everybody's got it by now, but if you haven't, definitely pick it up, because it gives you the critical information you need so you can implement a really good risk control program into your current trading style. And it doesn't matter what markets or time frames you trade. So definitely pick that up. It's an easy read, very inexpensive. I made it that way so it's affordable, okay? I mean, I think it's, you know, comes in a bunch of different formats too. Now, Survival Guide for Traders, that's been out a while, but basically this is a great book. It is a survival guide because it talks to you about what you need to know, to make it as a trader in today's market, but also it's a great reference manual as well. There's a lot of information in there that'll take you to different places in our industry for you to pick up different tools, okay? Whether it's data, brokerage suggestions, things like that. Also, charting platforms and things like that. Also, it teaches you how to run your trading just like a hedge fund. And you can do it right from your home with today's technology. And there's also business plans in there as well. And then I've got the Elliott Wave Technique Simplified, which is all about the Elliott Wave, which I use as a overall roadmap of the markets. So I use it as one of those dots to connect. Anyway, Gene put the link up for you guys. You can check those out on your own. And then also too, we've got tons of software available. And I want to go over this a little bit. We have charting software on the top row here. All right, that's the ART, OWL, PTF, TLM, and ERI. The ART software sells as a loan product. All these can be a la carte. We also have a bundle here where we call it the toolkit, okay? And then the ERI. ERI is a great add-on as well. So if you've got the toolkit and you've got the ART, add that on, because that is really great for scaling out of the markets. It basically tells us when fear and greed gets out of bounds, gets manic. All right, and then you can of course scale out as prices move back to the trend line of a more orderly trend. So that's one way to do that. And then this here is our scanners. This is how we find our markets. This is our new one we released this year. And boy, that sold really well. And the compliments we've gotten on that are tremendous. That's the multiple time frame scanner software. And basically it can be set for multiple time frames. And again, I'll be covering this afternoon at Wednesday Night Live if you don't know anything about multiple time frames. But that's a great scanner if you don't already have it. I think most people already now have the Trade Confirmer, the Turbo Scanner, and the Elliott Wave Scanner. And then finally at the bottom here, we have our suite of risk control software. And if you have the trade size calculator, all right, I would suggest upgrading to the risk to reward calculator. It's a very inexpensive upgrade. You can do it right on our shopping cart online. And it does everything the trade size calculator does, but it also does all the risk to reward calculations and the cost of the trade and things like that. So that's really good. And then of course, we've got our award-winning Trader's Assistant software that's usually nominated in the Stocks and Commodities magazine as an organizer and trade analyzer. So that's the software that we have. We feel it's the best in the world, and it's been carefully developed by me over the last 30 years of trading the financial markets. All right, now the other thing I want to address today and is something called Platinum Software Care. So a lot of people kind of are a little confused about what that is and what that does. So I just wanted to cover that. Now, Platinum Software basically is remote services. So think of it as remote services, but it is also what we charge when we actually switch platforms. So whenever you buy something from us in terms of software that is associated with a charting platform, let's say you're using NinjaTrader, okay, and you want to change over to TradeStation. Well, we need to switch your license, right? And so you need to purchase Platinum Care because that is how we switch it. You know, you purchase that and then we're able to switch it to the platform of your choice. So it's one of those requirements that you're going to have to do if you want to switch the platform, because when you purchase this software, the license is attached to one charting platform. So it has to be all switched over. And there's quite a bit of involved in doing that. Now, also too, if you purchase Platinum Care, not only can we switch the platforms over, but maybe you just need help installing it. Okay, Platinum Care is where we come in and do that. So we have a guy, all right, many of you know him, Mark, already, and he's our software engineer, and he remotes onto computers. And if you're having trouble and can't seem to fix it yourself, all right, this is a service that we provide. We do charge for this, and the reason we charge for this is because we have to pay him, and we also have to pay the people involved in switching the platforms. Okay, so there are some costs involved in this, but I got to tell you, he does a great job. So if you need help in anything in terms of setting up your platform and so forth, definitely consider Platinum Care. Does anybody have any questions on this? All right, and again, you can order this right in our software part. Let me bring that up and show you where that is, just so you know. And again, we're getting questions on this. So you come to the software shopping cart, you know, you can actually get to this through our website, all right? And you'll see a whole bunch of different things here. And you come down here where it says Tech Support Services, 30 Days Platinum Care. And this is where it is here, okay? And it's a one-time fee of $349. And basically, it's for 30 days. So for example, if you need help at all within those 30 days, we have a guy that will remote onto your computer and get you squared away. All right. So, and that's good for up to 2 computers, because our software licenses are good on up to 2 computers. So for example, when you buy something like the art software for NinjaTrader, all right, you get a license for that, and we email it to you. And that license is good for up to 2 computers. Now, if you get a brand new computer, we may need to reset the license so it includes the new computer, because you got rid of the old one. So that's free. We don't charge you for that. For resetting licenses, we don't charge you. So if you're having something where you're getting that little error message that says not activated, if you're using just 2 computers, you send us an email and we'll reset it. So whatever 2 new computers you start using, it will work on that. All right, so let me know if you have any questions on that, but there's no fee for this. But with Platinum Care, I'm just gonna once again read it. Unlimited live remote technical support, all right, and the ability to switch charting platforms. All right, so if you need to switch from NinjaTrader to TradeStation or TradeStation to MT4, whatever it is, all right, this is where you would do it with Platinum Care. And then not only that, but our guy will install it for you if you need it. Now, when you get a license, you're also going to get an email that takes you directly to our software download area, and when you download the zip file that has our installer in it, all the instructions on all the software is in there. So everything is right there for you when you need it. One more thing is that when you install the software, it installs all of our software. So for example, let's say you bought the art software and you went to our website, you log into the VIP Customer Hub area and go to Software Downloads, and then you select the charting platform you're using, and then it will take you to the download page for that charting platform. So you download our software for that charting platform, and let's say you bought the ART software, so you got a license for the ART software. Well, when you run the installer, it's going to install all of our software. It's going to install the OWL, the PTF, all the scanners. The only thing it doesn't install is the risk control software, but anything associated with that charting platform, it will install. And then, all right, you open up the ART software template and install it, and it will ask you for a license, and you put your license in and you're good to go. Now, if you buy the OWL or something later on, all right, you don't need to reinstall the software. You know that, right? You'll get the license, just load the OWL on your chart. A license activation window will pop up. You put the new license in and you're good to go. So that's why we did it that way. We kind of like to install everything with one installer, so you don't have to keep going back and reinstalling. Any questions on that? Any questions on that? Okay, so that's good. So that's going to be, we're going to keep the price the same, $349 for 2023. And there it is. Okay, so let me dump that. All right, and I just wanted to cover that because we get a lot of questions on it. All right, so there you have it. All right, so let me start out. What are your questions? So feed me some of your questions here, and I'll be glad to answer those. Got a lot of people here. So if you need me to go over the Elliott wave, if you need me to go over anything that maybe you're having trouble with, and if you have a course, you know, we have a whole suite of courses. Okay, they're really you know, they have a lot of homework and stuff like that. So if you have any questions on those, let me know. All right. We also have a day trading room. All right. So if you're into day trading, you may want to check that out.
Let's go over some Elliott wave.
Because we do a lot of testing. You know, we do a lot of testing on that. So it's pretty good. I'm sorry, did somebody say something? I couldn't tell if somebody.
Yes, I was saying, let's go over some Elliott wave.
All right, Elliott wave it is. All right, let me answer JP's question first. All right, some questions are coming in. So before I get to that, all right, when shrinking the OWL, is it okay to have the holes off the zero line? Not sure exactly what you mean with the holes, JP, but you know, what you do with the owls, you control it here. You see how I'm going up and down here? All right, so it depends on what platform. Probably, you know, what I would do is that whatever is the most recent pink dot, that's the one you want to focus on. On the day trading time frames, like the intraday time frames, you may see this pink dot move. All right, but it's always the most recent one, okay? And since I've got coaching with you, you can show me this afternoon and I'll check it out for you, okay? All right, Jerry, is there a course that covers the ERI and how to use it? We have, do you own the ERI out of chance? I'm not sure, I'm not sure what you own or what you don't. If you go into, you're running our software though, right? You have our software installed. Go to your documents folder or wherever you downloaded our software. Okay. Yes, have software. Okay. So in the instructions area, that's where you would go. Let me just go find that. What are you using? NT? Are you on Ninja? I think you are, right? Okay, so let me just check. Okay, fine. All right, so what you want to do, and give me 1 second, okay? This type of thing showing up, okay? Go into software manuals. So this usually is sitting in your documents folder. Okay, so go there now and see if you can find something that says, basically it'll say NT8 ART, AL, PTF, TLM, ERI with scanners. Now, if you don't have this, and this goes for anybody, you can log into the customer hub area and you can go directly there and download it again. So all this is available right there, okay? So definitely check that out. Now, if you double click on it, all right, then you get a whole bunch of categories in here, okay? You get the toolkit manuals, all right? NinjaTrader software manuals, right? So we got a whole bunch of stuff in here, okay? Here's all your PTFs and stuff like that. And let's see, toolkit, we got this, okay? And here's the ERI in here. It's called the ERI indicator instruction. So you go there, that will open up, and then there's a video, okay? So basically what we're doing is on the newer software, we're just replacing the instructions with a video. Okay, so that's where you go. All right, and what I'm going to do is I'm going to put this link right up here in case you don't have it into here. And let me just see if I can send that privately to you on the chat. Okay, give me a sec. Okay, so I just put that into the chat area, Jerry. See if you can find that. All right, take a look at that because that will walk you through it. Okay. And on NT, basically, the ERI is basically, it's kind of like the TLM. Okay, good. It's kind of like the TLM in that it's two software studies. One of the studies puts these little Fs up here. Let's see if we can find them here. You got them here. Let me open this up because there's also Gs too. All right, and then I'm going to erase that for a second. See all the G's are up here. So what happens, and you get G's here, what happens is that when prices get a certain distance from a trend line that's built into the ERI, you'll either get a fear and greed depending on whether prices get overdone to the downside, that will create a fear, or overdone to the upside, that creates a greed. Now, it's a signal bar. That's all it is. So basically, if it's taken out, then prices usually move in that direction, very similar to the way a ART 1B or 2B reversal has price action after it's triggered. It's usually good for about 2 to 5 price bars in that direction. So for example, here we started getting far away from the trend line here on this price bar, and you can adjust how strict you want these to show, and how whether you want to use a short term or a longer term trend line too. So this produced a greed bar, and this is a signal bar. Okay, so when prices go above a greed bar, you would expect them to go low. That means the greed is continuing. Okay, when they go in whichever direction it breaks, that means you're going to be good for 2 to 5 price bars in that direction. So we use it a lot for scaling out at certain times, and also entering markets at certain times as well. So take a look at that video, and that will go over more detail, kind of what that's all about. But there's also a ribbon at the bottom, all right, because if you have a lot of stuff, or you have your chart scrunched up, for example, like this or something, and it's hard to see them, just look at what's triggered down here and then open the chart up and you can see that, okay? You see what I'm saying? All right, so if you go, you'll be able to see them. Here you may not see it because they're so clustered close together, but this alerts you that something formed. Obviously, if it's red, it means it's bearish, and if it's green, it's a greed bar rather. All right, so let's just, or actually if it's a fear bar, it's green because that's a potential long trade. Now, if you go into the settings here, and this is basically the same for TradeStation 2, let me just find out, here it is. Okay, so here is the two studies associated with that. So if you change the index and the pitch, which are explained in the video, you want to make sure you do it on the ribbon too. So you want to do it on both studies so they're in sync. Okay, and you can play around with these settings to where it generates, for example, signals you want to see occur at different times. If you don't want to see as many, you make it more strict. And all that's discussed in the settings for the emotional index and emotional pitch. And then if you want to see only in the direction of the trend things happening, then you do that. Okay, so and that's explained as well. So it's a pretty cool indicator. All right, I use it a lot, especially for scaling in and out. All right, Elliott wave, let me get a little bit on that. All right, so there are 5 waves in a trend, right? What are those? What are the impulsive waves? Let me do a little quiz here. What are the impulsive waves? 5 waves. I guess I erased that. 5 waves. What are the impulsive waves? Excellent. 1, 3, and 5. All right. What are the impulsive waves on a correction? Believe it or not, I'm writing this with my mouse, so pardon my penmanship here. What are the impulsive waves on a correction? Let's just say a simple ABC correction. A and C, excellent, A and C. And what does that mean? So when I say there are, these are impulsive waves, what are the significance of that? What are the ramifications of that? Kind of an open-ended question, but think about it. What do impulsive waves have that other types of waves that are not impulsive have, don't have? Let me be more specific. How many waves are inside an impulsive wave? So wave 1, 5 waves, correct. 2, 3, 4, and 5. So that is a simplistic view of 5 waves representing a bullish trend, and the trend ends on the 5th wave. Now, waves 1, 3, and 5 are all moving in the direction of the trend, correct? Waves 2 are counter the trend, so they're moving down in this example. So in a bullish uptrend, waves 1, 3, and 5 are always moving in the direction of the bullishness. However, in waves 2 and 4, we have a move against the impulsive waves in the trend of 1, 3, and 5. So they're moving down. So bullish waves 1, 3, and 5 are going to be moving in the dominant direction of the trend. Waves 2 and 4 represent corrections in the trend and do not end the trend. They are just corrections, breaths in the market. So getting back to the question of what's important, all right, JP is asking, could the trend ever end in a third wave? No. And if it does, you probably miscounted the waves, because that's 3 is probably really a 5 if that happens, if you experience that happening. All right, now, and that's where, using the owl and so forth comes into play of helping us to distinguish that. All right, now, let me go back to this real quick. So in the impulsive waves 1, 3, and 5, we have 5 smaller waves, don't we? Okay, 1, 2, 3, 4, 5. Same thing with wave 3. All right, there's your 5 waves there. and here's your 5 waves here, right? Okay, so actually, you know, if we put all these things under a microscope, there's 5 waves here. We have impulsive waves inside wave 1, which are 1, 3, and 5, right? These little small waves. Guess what? There's 5 waves in here, 5 waves in here, and it goes on forever, technically, all right? Now, you got to take this a little bit with a grain of salt because it's going to be so minute at some point that it's not doing you any good to go too low, right? So you got to kind of, you know, use a little judgment on how low you want to go. But also too, these 5 waves, whatever time frame we're on, let's just say we're on a daily chart, these 5 waves are probably smaller waves inside a larger time frame, like a weekly or monthly time frame, right? So whatever time frame you're looking at the degree of the Elliott wave at that time frame. But there are many different degrees of the Elliott wave because there's so many different time frames. Okay, so when we use multiple time frame analysis, what we're trying to do is not get too carried away by having so many time frames to analyze, but instead just the ones pertinent to us for trading the current time frame we want to trade. So if you're trading a daily time frame, that's the one that we're predominantly focused on, but we're also looking for help on the 60-minute time frame for these to count these little waves in here. And then on the weekly chart, we're looking to see how these 5 waves on the daily chart fit into the overall bigger picture on the weekly chart. And that's kind of all I want to say with that, because I don't want to go down the rabbit hole too far. Okay. Does that make sense to everybody? Did I lose anybody? Okay, so, okay, good. All right, now, notice waves 2 and 4 are retracement waves. And yet when we talked about what are the impulsive waves, we also have waves A and C, right? So in an ideal correction where you get an A, B, C, those form on corrections. Okay, and we see that on a wave 2 as well. So if waves 2 and 4 represent downtrends against a bullish uptrend in this example, then doesn't it make sense that waves A and C are impulsive waves because they're moving down in the direction of the downtrend of the major corrective wave, whether it's 2 or 4? So just think about it and try to wrap your arms around this thought. So a lot of people get confused here because they're saying, well, how can you have an impulsive wave that's not moving with the overall trend? Because what we do is we're breaking each segment of the wave into its own box, so to speak. So think of this move down as representing, yes, a box in the uptrend, but it's also representing its own characteristics of moving to a wave 4 bottom. So you're going to have movements down in the direction of the wave 4 corrective zone. And those movements down are impulsive waves in that box only. Does that make sense? Okay, good. So let me just erase this for a minute and let's just focus on wave 4 for a moment. So here's your A, here's your B, and here's your C. or wave 4 bottom. Of course, 3 is up here. And then after wave 4, you get wave 5, right? So A wave and C wave are both moving in the direction of the finish of wave 4. And so there are 5 waves inside here. So impulsive waves always have 5 waves. Now, buckle your seatbelt. Here we have B wave, right? Well, B wave has its own little box here. And so you have an A, B, C, and B wave. Guess what? There are 5 little waves in here. A, B, C, 5. So anytime you can segregate a wave and make it its own box, any impulsive wave that occurs in that box is going to have 5 waves in the impulsive waves. So technically, on a correction, you almost have 3 boxes, don't you? You have an A wave box, a B wave box, and a C wave box. Okay? I'm not going to go into it too much more than that. Now, one more thing in terms of the wave structure. One more thing is we have wave 1. Now, wave 2 is a tricky wave because wave 2 can actually retrace 100% of itself. So wave 2 can form a double bottom, all right? And then as long as it bounces off and takes the high out here, you're in wave 3. So when you have a breakout from a bottom, it's very difficult to tell if that breakout is part of possibly a channeling market. And the only way you're going to know that is when wave 2 does not go below the origin of the low of wave 1 and then backtracks and takes out the top of wave 1. Then you have a wave 2, chances are. And think of it, you know, chances are if this is boxing inside a channel, then it's a breakout from a channel here too. And notice the Elliott wave scanner is looking for that type of situation and will deem this as a wave 3. And of course, it uses the owl as well. All right. So wave 2 can be a tricky wave. And it has a requirement that it really can't go below the starting point. If it does, it's not a wave 2. It's kind of a volatility inside a channel probably or something. Okay, so think about that. Now, the other thing too is 1, we'll do our corrections here, 2, 3. Now, notice where the top of wave 1 is. You know, when we draw our fib retracements in from here to here, we get a target zone, right? And sometimes 15% of the time they go below the target, 70% of the time they go in it, and 50% of the time they get below 23.6, but don't reach the high probability area. Okay, almost like a failed wave 4. But the key thing is on a wave 4, you cannot go below the top of wave 1 because that's a rule. If it does, it's not a wave 4. Okay, it's something else. You know, maybe this ends up being a 1 and this is a 2 or something of that nature on a larger time frame. But that's one of the requirements. And we saw that on Bitcoin, right? When Bitcoin retraced a little bit, but kept on going and kept on going, there came a time when the wave 4 trade was no longer possible. And you knew you were on a wave 2 and you could go right down to the bottom. And it did, and it even made a new bottom, right? So that was no longer a valid wave 4 tracement early on. All right, so, you know, think about that. The other thing too in terms of a rule is usually if wave 2 is a very simple correction, wave 4 may turn out to be either a deeper correction or a complex correction, okay? So if wave 2 is simple, wave 4, all right, could be complex and make another low here, okay? Before it takes off. Likewise, if wave 2 is extensive and complex and almost forming a double bottom, then wave 4 may be simple. So if one is complex, the other one can be simple. All right, well, listen, I went over the half an hour, but these are kind of some of the important elements on the Elliott wave that I think everybody needs to know. All right, so good questions on that. All right, well, I guess that is it for this session. Gene, any last minute things you want to add?
Yeah, well, I just posted a link for tonight's webinar on multiple time frame analysis. Come join us. I think it's going to be fantastic. So it starts at 7:30 p.m. Eastern Time, and it's Wednesday Night Live. So click on that link and join us. And I guess other than that, I guess we'll see everybody next year.
You can tell Jean's a New Yorker because all her times are in Eastern time. Every time I say a time, it's always Pacific time. Every time she says a time, she automatically converts it to East Coast. It's kind of funny.
I'm just trying to throw you off, that's all.
Yeah, I know, right? So 4:30 p.m. Pacific, 7:30 Eastern. Very good. All right, so listen, thank you everybody for being here. Have a really great New Year's, okay? And I get to say this once a year, so I'm gonna say it right now. I'll see you all next year. Take care.